Mortgage rates hit the lowest level of 2025. But before you celebrate, there's more to the story. So let's unpack what's really happening in today's housing market. As of this week, the 30-year fixed mortgage rate has dropped to around 6.18%, and some lenders are even quoting closing to 5.97% APR. That's the lowest we have seen all year, and it's giving some buyers a glimmer of hope after months of affordability challenges. To put this into perspective, compared to earlier this year, today's rates could mean nearly $283 less per month on a typical 400K home. Over the life of the loan, that's thousands in savings. But, and this is important, those 2 to 3% mortgage rates we saw during the pandemic, they are not coming back. Most economists agree that this range, roughly around 5.5 to 6.5%, is the new normal. Now, here's what's driving the shift. The Federal Reserve is widely expected to cut rates again at its October 28th and 29th meeting, following the first cut in September. Markets are predicting a 97 to 99% chance of another quarter point reduction, which could ease borrowing costs even further. But there's a catch. The federal government shutdown, now in its second week, is delaying FHA, VA, and USDA loan processing. That means buyers depending on these programs may face longer timelines, and in flood-prone areas, new flood insurance policies can't even be issued right now. So while rates are improving, some transactions are stuck in limbo until Washington resolves its funding battle. Meanwhile, the housing market itself is sending mixed signals. Inventory has grown about 7.5% year over year, and homes are spending longer on the market, around 48 days on average. That's giving buyers more choices and slightly more negotiating power. However, prices haven't really dropped. The median sale price is still near $389,000, up almost 2% from last year. So, if you are a seller thinking about should I wait for spring, remember competition is lower right now and serious buyers are still out there taking advantage of lower rates. If the Fed follows through with another cut this month, we could even see 30-year rates dip below 6%. But for many, that might also reignite buyer demand and bidding activity heading into the holidays. Here's the takeaway. This fall might be the sweet spot before the next buyer surge. Rates are easing, inventory is stable, and serious buyers are out there. But once the Fed cuts again, competition could heat up fast. If you are thinking about making a move or just want to understand how these changes affect your home's value, call me or email me. I am Roopa Realtor with Remax Select, helping Central Jersey move with clarity, data, and confidence, even in uncertain times.